Recipes for technical trading success in Cook's Kitchen.
What's the best game on the planet? Of course, I think it's the stock market, and I've said that for at least 20 years. Today, I'm calling it a cult to get the point across even better. You know, do you have any kids who play video games? You know, they're on their Xbox or whatever it is they play these days, and it's super technical and complicated and fascinating and obviously hypnotizing. But I wish I could get more kids interested in the stock market. So this is my attempt. Let's roll. I did a podcast with Tracy Reineck on her Market Edge show just yesterday, July 18th. Or actually, it was Monday, July 18th. Today is Wednesday, the 20th. And her theme was how to pick stocks. So we went over, I gave her a 10-point checklist of things that I use, Cooker's process. And through that discussion, lots of these other themes came out. And I realized that I was building towards calling the stock picking game a cult. All right. So in my 10-step process, which you can find on her Market Edge podcast for July 18th. So actually, now that I think about it, July 18th was Tuesday that it was published. I give my 10-step process. Here are 5 of them. I look at the Zacks rank, obviously. I do screening, quantitative screening, comparing growth metrics to valuation. A big one for me, number 5, is I ask, is the business a franchise? And you have to listen to the podcast to learn what I mean by that, but it has to do with companies like Alibaba and Align Technology. Number 8, what is the big money doing? I've followed the institutions for years. I want to know what they're buying, what they're selling, what they're holding on to, what they're adding to. Number 10, what about the chart? Yep, still look at the charts. It's probably the least important when you look at all these other fundamental factors, but it's excellent to use the chart for a timing opportunity. You know, either you're buying on a really nice dip to support, or maybe you're buying a breakout to new highs after consolidation. All right, so why is stock picking a cult? I list several reasons. It has its own language and art. Obvious, as you get into it, you'll see that. Fanatics like us, we love the conversation. And as I've said, I've called it for 20 years, it's the greatest game. It's 3D 24/7 chess. It's also Game of Thrones. And what I mean by that is there are titans competing on Wall Street, whether they're mutual funds, investment banks, or the companies themselves. So kings and queens at the throne of all these businesses or institutions, and you're talking about billions and billions of dollars changing hands in the market caps of those companies, and then quarterly in the revenue and sales of these companies. So, and there are a lot of stories that go along with it, and intrigue, and we'll get to the bad guys in a moment. Stock picking is a cult because it has extremists on both ends. You've got, on one end, you've got the very quantitative, fundamental analysis guys, whether they work for a bank or a fund, you know, using, you know, detailed quantitative rules to pick stocks and balance their portfolios. And on the other side, you have the pure technical chart people. They can be their own fanatics. Wall Street also has its share of bad guys. Most don't go to jail. Most are, you know, either trading inside information, or, you know, and you see it sometimes in the options. And then lastly, stock picking is a cult because it has its own drugs. I'll explain that in a minute. All right. So I did a video almost a year ago, last summer, called the $200 Club in August of 2017. And I was looking at 5 stocks, all trading around 150 bucks, that I said were in a race to 200 bucks. And they were Alibaba, Align Technology, Facebook, NVIDIA, and Lam Research. Now, they all made it. Finally, Facebook was the last. So the question back then was, will Facebook beat Alibaba there first? No, it was the last because the others were all making their way. Align is headed to 400 this year, I think. We've owned it for a long time. NVIDIA probably headed to 300 sometime in the next 6 months. Lam Research struggling a little bit as you know, they make the semiconductor wafer fabrication equipment, and there are concerns IP protection. We don't want to sell that equipment to China as they plan to build their own semiconductor industry. So Lamb is down a little bit because of that. All right. Prediction is tricky, especially about the future. I want to bring in a couple of concepts here you need to think about when you think about the stock market and the incredible game that it is. First of all, we go back to the economist Joseph Schumpeter and his killer phrase that sticks with people when they think of his name, and that was creative destruction, what the cool kids nowadays call disruption. The idea being that in economics, things, innovation creates turmoil, right? But it also creates opportunity. And we see it all the time now. The other concept comes from evolutionary biology. Punctuated equilibrium was made famous by one of my favorite evolutionary biologists, and that would be Stephen Jay Gould. And when he looked at the fossil record, the geologic record, the record of life, going back to the Cambrian explosion 500 million years ago, what he saw were patterns of stasis and then explosions of life, disruptions, whether they were caused by a geologic event or something else. And this is what changed evolution, changed the path of it, and made it very unpredictable in a lot of different ways. So it's kind of a handy theory, but it applies to a lot of things in life, especially chaotic stock markets, where the tails are very fat and they run away wide. We learned that from Nassim Taleb in The Black Swan. All right. Lastly, why is prediction so tricky? Look at these four companies: Google, Amazon, Apple, and NVIDIA. What do they have in common? Different types of businesses, but they sprang out of nowhere and they dominate in ways that are almost unpredictable. How many investors have owned Google, Amazon, or Apple and then sold them because they were worried about the businesses dying? And yet, Google's famous for search and the internet. Amazon, obviously, for getting you cheap products quickly. Apple for devices, must-have devices. Those three alone, they just keep evolving. They know that they're in the business of innovation, really. So Google has hundreds of different businesses that you don't even know about. Amazon is obviously eating everyone's lunch. And Apple is planning for what comes after the iPhone. Believe me, they're going to be huge in augmented reality. Whatever device that we're carrying 10 years from now that'll be different than the one you're carrying now, they're planning for that. That's why they built that trillion-dollar spaceship out in Cupertino. All right, and then NVIDIA is obviously, who knew, even 5 years ago, what NVIDIA could do with the gaming chips. We started out talking about gaming. We come back to it because now the graphical processing units that are used in gaming chips are fueling artificial intelligence and data centers as software eats the world. All right, why is prediction so tricky? Give you 5 quick reasons that have to do with human nature. 1, we don't like to lose. 2, we aren't good at thinking long term. 3, we insist on order, logic, and balance. We get a little emotionally addicted to those things, and it's not realistic. 4, we can be lazy, and we want investing to be easy, and it's not. 5, we're guilty of other of the 7 deadly sins besides sloth, the aforementioned, and that would be pride, envy, and wrath. Watching, we're proud, and that so we don't like to take losses. We also want to capture profits too soon, and then we get envious of other successful investors too. All right, so who are the cult leaders? I made a video last October, just a 1-minute video. I did this with Business First and Angela Miles over at the Chicago Board Options Exchange about following the big money. If I could just give one tip to investors, pay attention to what the big money is doing, because they invest for the long term. They do deep quantitative homework. They buy companies, they try and buy franchises, and they expect to hold them for 2, 3, 4, 5 years in a bull market, right? They're maybe concerned about a recession, but if their probability is low for a recession, they hold on to their stocks and they buy the dips. So I start out that video saying, hey, what's the secret to success in a bull market? It's buying the dips, right? But that doesn't really tell you what's going on. Who is buying the dips? And it's the big money. Guys like pictured there is Dan Loeb of Third Point, Steve Mandel of Lone Pine Capital, David Tepper of Appaloosa, Mario Gabelli, Andreas Holverson of Viking Global, some others, Jim Simons of Renaissance Technologies. Jim is no longer actively running the firm, but Renaissance Technologies is probably managing $50 billion now, and they were a forerunner of quantitative algo trading. Some others, Wellington is a big fund management firm you've probably never heard of, AQR, Cliff Asness, and Artisan Partners of Milwaukee. All right. So let's come back to my last point, the drugs. What drugs am I talking about? I'm talking about your brain's own drug, dopamine. In the podcast with Tracy, well, first of all, I did my own podcast on dopamine and the weather starting in June. I've done a part 2 in July. I might even do a part 3 because it's so fascinating once you understand how dopamine works in your brain, not just to alert you to reward, but then it's all wrapped into memory and learning. And so what I pointed out to Tracy's listeners on our podcast was that unless somebody has the experience of holding on to, say, a franchise stock like an Alibaba or an Align Technology, and gets that double or triple in their investment, then they're less inclined to do it. They don't have that reward in their brain, and that's how dopamine works. It tied in with memory and learning. It teaches you, hey, this worked. Now that I have the experience, I'll do it again. And what it prevents is the common phenomena where let's say you've got 50 to 70% returns in a stock, and all of a sudden in a week it's down 20%. What do most people do? They panic and sell instead of reevaluating the business and say, no, this is something I want to own for 2, 3, 4, 5 years. And so that's where dopamine comes in, when it teaches your brain, based on experience, what rewards you know will work for the long run. All right, that's all I wanted to talk about in the stock market as a cult. In the podcast with Tracy, her Market Edge podcast, I give a great example of Amazon, just like I talked about. And one of the questions I always ask is, what will the other guy pay? What will the investor pay for this stock over the long term? And what might an acquirer pay? So those are other big questions to ask yourself. All right, thanks for joining me in the Cult Kitchen. We'll talk to you soon.